This video is to help you, a beginner wondering how the charts actually work, right? It's like a first step to understanding what the chart is about, just in case you feel like the market is very complicated. I assure you it's not. The market is really easy to understand. The candlesticks are pretty easy to translate if you just understand some very few basic principles. You don't even need to know too much at the very first stage, right? You don't need to bombard yourself with too much knowledge. There are just some few things that I will teach you in this video that you would see that might change your perspective on, that will change your perspective on how you see the markets. So first things first, when you finally decide that you want to learn how to trade and you have fully grasped the concept of, currencies, currency pairs, and understanding, what you're buying and what you're selling and all of that. How do you now translate it into the actual market situation? How do you now, look at the chart and identify things to help you know when the right time will be for you to get into the market for a buy or to, get into the market for a sell? So my name is Zazie. I show people that the charts can be very easy to understand. I make price action seem really, easy, and you would literally understand the charts by just looking at it without even having to insert some layers of indicators or whatever, because the charts are actually very, very easy to read, and I'm about to show you that today. The first thing that I usually show, my students when we start talking about reading the charts is candlesticks, right? It all starts from the basics for me, right? There are some people that feel like candlesticks are just, too much of the basics and you do not really need all of that, right? For some, it's not a very great starting point, but I believe that it's a very good starting point because candlesticks to me are like the skeletons. They're like the inner part of the body, so to speak, right? Once you're able to understand the candlesticks individually, you'll be able to understand the candlesticks as a collective, right? You'll be able to understand how they all move together, right? But it's very important for you to like single out some candlesticks, right? So you can understand the role that they individually play in the charts. So you're able to then interpret the role that they play in the charts as a collective. I'm going to be talking about 2 candlesticks, but if time allows, we could probably talk about 4, right? These are candlesticks that you see on the chart, and you might not have understood how important or how powerful they could be, right? But in this video, you are going to have a different perspective, right? You'd see them for what they are, and it will make the chart make more sense to you. So we will be talking about what we call reversal candlesticks. Now, there are a lot of candlesticks, right? Candlesticks serve some purposes. Some candlesticks serve purposes of continuation, right? Some candlesticks serve purposes of reversal. So today we're going to be talking about reversal candlesticks, right? I say this because I'm talking about reversal candlesticks because reversal candlesticks are very easy to spot. We have reversal candlesticks that are made of one candlestick. We have reversal candlesticks that are made of 2 candlesticks together. We have reversal candlesticks that are made of 3 candlesticks together, right? But for the sake of time, we're only going to be talking about reversal candlesticks that are made of just 1 candlestick. You've probably seen them a lot of times in the charts. You've not understood their significance, but now you're going to understand their significance. So the very first one we're talking about is the hammer, right? You call it a hammer. Some also call it the bullish piercing, right? This is a very common candlestick that we see in the charts. The hammer is a bullish reversal candlestick pattern made of 1 single candle. So that simply means that when you see the hammer in a point where, if price has probably been selling for a long time, and we probably see the hammer in a point where we expect price to buy from, right? When we spot out that formation of the hammer, we can have an idea that price should be telling us that the market is about to go up or is about to go bullish. So it is reversing the market from selling to now buying, right? So that's the idea. That's why it's called a reversal candlestick. It changes the direction of the market. We're going to see examples of a hammer, but typically a hammer would look like this, right? And we could have like a straight line. My line might not be so straight, pardon me. Okay, this is good, right? So you could have this, right? So you could see, you usually see the hammer after market has sold for a while, or at a point where you actually would expect reversal, to the upside. Now, if you're a beginner, you might not be able to spot out those points where you should actually get those reversals and know those points where reversals are significant, right? But you don't have to worry about that right now. For now, just focus on identifying the hammer in itself. So when you just stumble on it on any chart, maybe you've seen price has dipped for a while and then you spot a hammer, you are able to understand that this is the role that the hammer has played in this market. As I'm looking at the chart now, I can already see some areas areas where the hammer has played some significant role. And as we proceed, I'm going to show you this example. I'll show you this example in the chart so you can see it for what it is, right? One thing you want to know about the hammer is when you spot out the hammer in a zone or at a point where you expect market to buy from, the color of the hammer doesn't matter. It could be a green candlestick, it could be a bullish candlestick. In this case, my bullish candlestick is my yellow candlestick, and my bearish candlestick is my blue candlestick, right? So it could be a yellow candlestick, it could be a blue candlestick. The color is very insignificant. What matters is the shape, right? Because the shape actually has a purpose, it serves a purpose, it has a meaning, right? And what it simply means is that because of the presence of this wick right here, the wick serves as a footprint to tell us that during the formation of this candlestick, right, regardless of the time frame it was formed, price once visited this area, right, and then went back up and closed at this point. In this case, if it's a green candlestick, the open is obviously at the bottom and the close is at the top. And then if it's a bearish candlestick, the open is at the top and the close is at the bottom, right? But ultimately, the wick is trying to tell us that price sold to this point, but there was a huge rejection and price was pushed back up. So because of the presence of the wick in this candlestick formation, it can interpret or explain to us that there could be like some movement of price to the buy side. So market is being pushed up, right? And there's chances that price will actually, buy. Let's check out a couple examples. I can see them right now and I'm itching to show you these examples. The very first one I can see on my chart is this one right here. Now, one thing that is significant about the hammer is that sometimes you could see wicks at the top, other times it could be no wick. So it's like a little or no wick situation, right? So we could have something like this. There could be a wick at the top like this, right? Or there could be no wick at all, to be honest, right? So it just totally depends. When you see it, you just know what's up. I've seen two now. So this one and then the other one I'm going to show to you. So if you look at this candlestick right here, you notice that you can see the body and you can see that there's a tiny wick at the top, right? And also, you see how market sold for a period of time, and then at this point price came here, and right here there was a hammer that was formed. Now after the hammer was formed, another candlestick was formed. I'm going to tell you about that candlestick as well, so that you can see all of these candlesticks and how they react in the market. But from the hammer, right, you see this candlestick, and then eventually another bullish candlestick forms to tell us that price should actually be going right up. Sorry, give me a minute. No, sorry. This candlestick be confusing me. This is a bearish candle. My blue candlestick is my bearish candle. You know what? Let me just change this so I don't even confuse myself during this video. Right. Okay. So you can see my hammer right here now. This is the red candlestick. I told you the color doesn't matter, right? So you can see that the red candlestick here has given us a hammer formation, right? And then after the hammer formed, a couple other candles also formed as well. An inverted hammer formed right here. I'm going to tell you about the inverted hammer in just a bit, right? Then afterwards, you can see that there was a confirmation candle that formed right here. So we would have just taken a buy here. Typically, if I were to be buying this market based on just this and maybe some other things that are proliferating in the market, right? But spotting out my entry based on the reversal candlestick, an easy thing for me to do is take out my buy from here, and then my take profit to be at this, major resistance point right here. So that have been a very simple 1 to 5 risk to reward, right? I mean, sometimes it's not this simple, but other times you're able to just spot out some very simple moves that just act as confirmation that tells you that okay, it's time to just go in. Those kind of simple trades that have like very high risk to reward. This is an example, right? So a hammer has just formed and shown us that okay, this is what market should do at this point. Another example of a hammer I see here is right here at this demand zone, just right here. It's too easy, it's too obvious, right? For those who do not understand the concept of demand and supply, maybe one of these days I'm going to make a video explaining what that is. But I have that in my course. So you'd see like a link to my Telegram. You could just send me a DM, right? If you like to get access to the course, right? I'd explain in details the concept of demand and supply, how you'll be able to spot it out in any market situation, understanding the concept of demand and supply and how it differs from support and resistance, and how you can marry both, in the charts to get like a crystal clear analysis, that frees you from confusion and gives you enough confidence to actually take a trade. So right here at this demand zone, we can see that the hammer is being formed at an area of reversal, which is this demand zone right here. This is Euro USD on the H1 time frame, right? And we know that the H1 is one of the strong time frames as well that you can totally rely on. So price around this demand zone formed the hammer, and this hammer is very interesting because there's no wick at the top, but you can see the wick at the bottom, very significant, very obvious, right? The wick at the bottom has given us that idea that there was a huge rejection. Price tried to dip through this demand, but the demand was strong enough and the market went back up, forming for us a solid hammer. Now, right at this point, it would have been a very good entry point. Now, when it comes to reversal candlesticks, there are two ways to take your entries, especially for reversal candlesticks with single candlesticks like this, like the hammer. One way to take your entry is you can just go aggressive and take your entry immediately your hammer forms, and then set your stop loss obviously below the hammer or below the zone that you're validating, right? Anyone, since they're almost at the same point, so just be safe to just put it below the zone, right? If your take profit is at the next resistance level, this will give you a clean 1 to 3 risk to reward. Very sweet and easy. Another thing you can do is wait for confirmation candle. Confirmation candle in this case will be another candle that is forming that corresponds with what your hammer is trying to tell you. So corresponding now means that you need a bullish candle to validate your hammer. You need a bullish candle to confirm that yes, the hammer is serving as a reversal candlestick, pushing price to the upside. So in this case, the candlestick that formed immediately after the hammer was a bullish candlestick and it was solid, right? So this candlestick also validates the hammer, validates that okay, market is actually good to go. The distance between the close and there's some distance because this is the bearish candlestick here. So if we're taking our trade immediately, our entry would have even been like below it. So our risk reward would have actually been 1 to 4.77. But in this case, we had if we waited for confirmation, our entry would have just been a little bit above and risk reward would have been 1 to 3, which is also cool, right? You know, extra confirmation is still good, but sometimes for me, I like to just go in when I see my reversal candlestick, because especially if I've had like other layers of confirmation and I've had like other reasons for confluence, right? 3 or more things have told me, okay, this market is bullish. I do not necessarily need one extra candle to form for me to take my entry, because sometimes it could mess with my risk to reward. So I like to just leave it and take my entry the moment I spot out my reversal. That's how I like to trade when I see my reversal candlesticks at major zones that I'm expecting price to actually react from. So in this case here, of course, an easy way to take the trade is spotting out, seeing the hammer here, taking your entry, putting stop loss below the hammer or typically below the zone that you're validating. But most of the time, below your reversal candlestick is always very safe, right? And sometimes the market just, goes below that zone. It just sometimes would mean that, it's invalid and market might just be going in an opposite direction from what you expect, right? So that's very valid to do. You can put your stop loss below your reversal candlestick, or if the zone and reversal candlesticks are like somewhat close, you could just ultimately put it below the zone and you'll still be in a very good place. Right, so you could check out some more examples for yourself, right? See how the hammer has formed in like different charts, so you're able to understand. So when you see the hammer next in a chart, in a position where maybe price has been falling for a long time and you spot the hammer and then you see that from the hammer market started to buy, you'll be able to understand that okay, this was the reason, or this was part of the reasons why price actually went up, because at this area here there was a sign of reversal, right? So another candlestick that I want to quickly talk about is the inverted hammer. So we just talked about the hammer now, and then let's talk about the inverted hammer. So the inverted hammer is simply a hammer that is turned upside down, right? It's simply a hammer that is turned upside down. So it's like you flip it, right? You just flip it and they serve the same purpose, right? Same difference, serve the same purpose. You'd find them in the same point. So right here, still that same example that I was giving. Right here, we can spot 2 reversal candlesticks, because the first one is the hammer, right? And then the very next one is the inverted hammer. Both things telling us that market is going to do one thing, which is buy. And right immediately there was the confirmation candlestick, which is the solid bullish candlestick that formed right here. So it validated the hammer. The inverted hammer also like contributed to that, and sort of gave us an idea that market was actually going to buy, right? Let's see if I can spot out another example real quick. So the inverted hammer is found at the same position where you find a hammer, right? You find it at the bottom, or after market has been selling for a long time and you're looking for an opportunity to buy. Once you spot that, you know you're good to go. See another hammer right here. You can see how market sold for a bit and then formed the hammer right here, and then after the hammer you can see how price actually bought all the way to this point before price was before it reversed and all of that. So spotting out these hammers and these reversal candlesticks can go a long way into changing your trading game, changing how you see the market, changing what you expect from the market. Sometimes hammers are really big, like this one, right? But what makes it significant is the wick. The wick shows you the extent to which price actually dipped before it was pushed back up. So that rejection is what we need to confirm that the hammer is actually solid, and it would likely, give us a pushback to the upside. I can't really find an inverted hammer right now. Maybe you just do that on your own while I quickly I don't know, talk about one more or two more reversal candles. I like to talk about the four of them together because they are very similar, right? So the next one on my list is the hanging man. A lot of people do not know that this is called a hanging man, but it's actually called a hanging man, right? A hanging man is like a hammer, but it is found at the top of the charts, or it is found after market has been buying for so long at a zone where you expect market to actually sell from. That is what a hanging man is. It's like a hammer. It is exactly what a hammer looks like. It is just that the positioning is different. You find it at the top of the charts, at a point where you expect market to buy from, at a resistance point, at a supply point, just basically at a point where you expect price to actually dip from. That's where you find the hanging man. And then of course, just like every other reversal sign that we've talked about, when you find the hanging man, you might want to wait for confirmation, or you might just want to totally check out just going like that without waiting for confirmation. Let's see if I can spot out a hanging man. At least one example would suffice. Yes, I see one. Very solid. Look at this one right here. Sometimes, just like a hammer, you could find a little wick at the top or no wick at all, right? So if you see this one right here, you can see here that after market bought for a while, right, we spotted out a hanging man. Now you see that thing I told you about confirmation. This is a very beautiful example of why I would not necessarily wait for confirmation before I just go into my trade, right? So if I were to be selling based on this hanging man, the moment I probably will look at other things, right? I might not necessarily know that this is the point where I need to buy from, because sometimes some reversal candlesticks might form and price might not actually go in that direction. But let's assume that I want to sell. I want to show you two scenarios why waiting for confirmation might not really be a thing for some people, and then going in immediately after a reversal candlestick forms might also be a thing for some people, right? So if I were to be selling based on this hanging man, my entry would obviously be at this point right here. My entry would be at this point right here, after the hanging man forms, of course, right? And let's assume that my take profit is at this zone, because this is a zone, right? This is a support. This is a 1 to 6 risk to reward, right? And this trade would have taken me how many days? Let's see. This would have happened on the 6th of November. TP would have been hit on that same 6th of November within, like, say, 3 hours. Crazy, right? Now, if I said I wanted to wait for confirmation, obviously my confirmation candle will be this red candlestick, and I'm not going to be able to enter a trade until the red candlestick is done forming. So I'll take my entry here, and my stop loss would still need to be at that point above the hanging man, right? Because that's where it's safe. That's where the reversal started popping from, right? Now, where would be safe for me to put my... Typically, if I were to be selling based on the hanging man, this would have been my take profit, and I'd have gotten that 1 to 6, and I'd have been okay, right? But now with this one, I'm now thinking, well, I set my TP. If I want to just do a normal 1 to 2 risks to reward, it's valid, it can work, but it might be risky, because what if price is affected by this zone, and from this zone market starts to go up, right? But of course, maybe other forms of analysis might have been done that will make you feel like price might break out of this zone. But what if the zone actually does hold? Right, you've waited for confirmation and let all of this money go, right? While you could have just taken your trade here, risked a little and gain more. But of course, the method is different for some people, right? For some people, they would totally enjoy waiting for that confirmation before going into their trade, which is admirable, right? It's amazing they can do that, right? But for me, personally, I like to just go in one time, so that if it doesn't happen, it doesn't happen. But if it happens, it happens good, right? So that's how I like to take it. But either ways, it's valid, right? It's just that they both have their pros and cons, and that's totally okay. So that's that about the hanging man. The very last one, which makes it the 4 complete ones, is the shooting star. right? And the shooting star is just like an inverted hammer, but of course, it is also found at the top, right? So shooting star is shaped like an inverted hammer, which is a hammer turned upside down, but in this case, it's found after market has been buying for a long time, or at a resistance point, or at a supply point, or generally just at the point where you expect market to sell from. Right, the moment you spot out the shooting star, you're able to tell that, okay, this is a point, price has bought all the way to this point. The week 7 as a footprint has told you that price at least came all the way up here, and then market was suppressed and pushed back down, right? So now you can tell that, it's time for you to actually go in short and sell, right? Two ways to trade it again. You can either go in immediately or maybe wait for your confirmation candlestick, which needs to be a bearish solid candle. Once that candlestick is done forming, you can go in for your sell, right? And then set your stop loss right above the reversal candlestick. Let's see if we can get some examples before we call it on this video, because I think we've learned something, right? If you've learned something in this video, please drop a message in the comments. Let me know what you particularly enjoyed about this video. Did you learn something new, right? Do well to let me know. Now, this is an example of a shooting star. It's quite big. The body is big and so is the wick, so it is very valid, right? This is obviously at a point where we expect some sort of reversal to happen, right? Because right here is some sort of resistance, right? And at this level, you can see that price gave us a shooting star, long wick, long body as well, but the wick is also very long, right? And then right after this one, we had, if we had gotten in immediately, to would have sold, right? Set our stop loss, right above the wick of the shooting star, and I'll take profit at the next resistance zone, right? And this would have been a very clean 1 to 4 risks to reward ratio. Very clean, too clean 1 to 4 risks to reward. If we wanted to wait for confirmation, because the next candlestick is a bearish candlestick and closed at this bottom here, our entry would have been at the close of the candlestick here, and our stop loss would have still been at that same point, right at the top of the reversal of the shooting star there, right? And if we're aiming at take profits at this point here, you can see that the risk to reward has changed, right? This is 1 to 8.4, not even up to 1 to 2, right? Crazy. And that is because you waited for an extra layer of confirmation, which I do not discourage. It is totally up to you to wait for that extra layer of confirmation. But personally, I would like to go into my trade the moment I spot my reversal candlestick, especially when my reversal candlestick is just acting as an extra layer of confluence. So I do not really need another candlestick to form and, keep letting my money go when I can as well just enter. And if it happens, it happens. Because at the end of the day, truth is, whether or not there's a reversal, there's a confirmation candlestick, it does not guarantee that the market will actually sell or buy as you expect. So why don't you just get in still once you get your move and just allow the market move and give yourself a better risk to reward, right? That's just my opinion though. You don't have to take it. But if you've learned something new in this video, let me know in the comment section. There are a lot of other candlesticks, a lot of other reversal candlesticks that we can spot out in this chart. This is another example right here of a shooting star right here. But not so much really happened here, but there was some sort of reversal at some point, right? And price sold all the way to this point, and if we were to be checking this market, we probably might have found a reason to sell, but this would have been a good enough trade that we'll probably not even need to rush into getting into another one immediately. But yeah, you can do well to check your charts and try to identify these candlesticks on your own, right? Sometimes when I teach my students this, I give them assignments and I tell them to spot out these candlesticks and then submit it, so we check them out in class together. So you can do that on your own to just see how many you can identify, right? And then if you feel like telling me, oh, I was able to identify some of these candlesticks, you can just let me know. This is one more, right? This is another one right here. You can see how market bought all the way up here, and then right at this level here there is a shooting star, right? So you can see the thing I talked about, confirmation again. If I were to be trading on this market, it's too simple, it's too easy. I could have put my sell right there, my stop loss right at the tip of it, right? And then my TP right here, this support area here. You see at some point price tried to reverse, but at the end of the day, price still hits TP. And this was a clean 1 to 4 risks to reward. Very clean, too easy, right? This trade would have started happening on the 25th of September. Take profit was hit on the 1st of August, maybe like say 6 days or so, or how many amount of days, but it's like a week. Let's just say a week, right? But a very amazing trade, right? 1 to 4 weeks to reward, and you don't have to stress simply because you're able to identify the reversal candlestick that popped. Now, if you are chosen to wait for confirmation, which in this case confirmation candle is the next candlestick right here, your entry would have been here, and your risk to reward would have been 1 to 7, not even up to 1 to 2, right? So you see that thing I said about, waiting for that extra candlestick confirmation and just going in when you see the reversal candlestick. It's only up to you. Weigh the pros and cons and decide which one works best for your trading style, right? So I will do my best to show you in another video other candlesticks that you can identify in your chart. So when you see them in your chart, it makes sense to you. The chart actually makes sense. There's a hammer right here. You can see the hammer. You can see where the hammer formed. And if we're taking a buy, oh my God, it gets too easy, If we're taking a buy based on this, right, and set take profit right at this resistance here, it would have been a clean 1 to 3 risk to reward. Amazing trade, so amazing. In fact, the entry would have been from here actually, because this is where the candlestick closed, right? This is where the candlestick closed, and it would have been a 1 to 6 risk to reward. If you had waited for that extra confirmation, it would have been a 1 to 2 risk to reward. So these are like the differences. These are like the different ways to weigh the pros and cons of these entry confirmations with candlesticks and all of that. But in this video, I'm really hoping that you've been able to see the difference between the hammer, the inverted hammer, the shooting star, and the hanging man, right? The shooting star is also called the bearish pin bar, by the way, and the hammer is also called the bullish pin bar, right? But the hanging man and the inverted hammer, they're just the way they are. I'm not aware of any other names that they are called, but yeah, so you can know the difference, right? The hammer and the inverted hammer are bullish reversal candlestick patterns. The hammer is straight up, and then inverted hammer is just flipped upside down, but they are found at the same points, at a point where price has sold for a long time and we expect market to buy from, or at zones where we just generally expect market to buy from. While the shooting star or the bearish pin bar and the hanging man are candlesticks that are found at the top where we expect market to start dipping or sell from, right? So know the difference. Try to spot them out in your chart so it's easy for you to identify these candlesticks. In another video, I'll show you some other candlesticks that you can spot out, right? So when you see them in your charts, you're just able to just take some very simple trades. Sometimes you don't really need to do too much. Sometimes just the simplest things that just switch up the whole game and just make you some very good money, right? So yeah, try as much as possible to explore this. If you like this video, do well to give me a thumbs up, right? If you have any questions regarding the charts or regarding spotting out any of this candlestick, you can leave a message in the comment section. Let me know how you feel about this video, and from time to time I'll do my best to put out some really nice educational content to help beginners like you or folks that are still struggling to understand the financial markets and understand how to understand pure price action, right? I'll make videos like this to put you on track, right? So you don't really have to spend so much, right? You can get this video and this content completely free, so it can help you, put you on the right path to understanding the market in its simplest form. So again, my name is Zazie. Do well to subscribe and turn on post notifications so the next time I drop a video, you'll be the first to get notified and you'd watch it and enjoy the content. If you do like this, give me a thumbs up, and yeah, I'll see you again in the next one. Bye.